Welcome back. This is recap or review part two. Hope you saw the first one. So we've decided, let's say that we want to do a sell because we're in a downward trend trading channel. It's a good channel here to trade. It's a good swing up into either edge of the channel. Let's assume that our current chart is there. Okay, so we've decided, and we've already seen it hit the resistance trend line and start heading down. So we want to put a sell order because we remember that when we see that the rate is going to decrease, we want to do a sell order. So let's put a ray right here, more or less off of the sell. Let's move this back over here. And there's our starting or opening price. And then later in the future, let's pretend we're going to close out our position with a buy. So we will have seen it go down and then bounce, go up again. So we're going to probably buy right there to close out our position. So those are our opening and closing rates, and we want to know how many pips and then what kind of money we made and so forth and so on. Now we could calculate this. All you'd have to do is subtract one from the other. It doesn't matter which direction, and you'd get the pip movements. But we can also have some help here with that. Right here we have a price range help. So we just click on price range. We start here, and then we just go down to here, and there's our price range. So this thing is telling us that it's 38.4 pips. So we can go over here to a pip calculator, put in 38.4 pips, and we have currency pair that we're trading, Euro USD, and right now trade size lot of 1. Our account currency is US dollars, so if we did a trade size lot of 1, we would be making $384. Do you remember why it's $384 based on what we have here? If you remember, we went over this before in previous videos that if you trade a micro lot, 1,000 units, when your account currency is USD and the quote currency is USD, this is what it equates to. Every pip movement is 10 cents. Here's 1 pip movement. There's 10 cents. Here's 2 pip movements, 20 cents. 100 pip movements, $10. Okay? Pip movement 1. But now my trade size is a mini lot. Or then my trade size is 1 lot, $10. Okay? You remember how that works? But our pip movement, in fact, we're expecting or hoping that it'll be 38.4 pips. We would stand to make $384 if we trade 1 standard lot. So we want to put a sell order right here. And we could do a market or a limit. We've been over that. And so, we would have the price at, 102. Let's go ahead and do it. 102.53. That would be our sell. But the question is, how many units or what lot size do we want to do? Because our profit or our risk taking directly depends on the number of units that we put into play. It's not just the starting price, and all that. How many units do you want to put in play? So we've seen this before. We've talked about the position size calculator. So let's come here. So our account is in USD. Our currency pair we're trading is Euro. We happen to have in our paper account 100 Now, let's say that we want to risk 100% of it, which you don't want to do. Now, let's say that we're not going to do a stop loss, but I'll show you why this still works, or this still is useful in this calculator. Let's say we put a stop loss of 1, and we're going to calculate. Now it says that our entire amount is at risk, and we can put in an order for 10,000 standard lots. That is, here's 1 million, 10 million, 100 million. I think this is 1 billion. Is what we're doing. Now, we don't want to do that. Actually, no broker for retail trading is probably going to let us do that. So, but let me tell you what we're saying with this stop loss of 1 pip. If in that calculator we set it up to say we'll accept a stop loss of 1 pip, meaning we're going to allow the direction of this chart, if it's going to go against us and we were wrong, because we think it's going to go down. Let's say it went up. If it goes only up 1 pip, that means we're going to go from 1.1025 to 1.1026. Like 1 pip is nothing. Look, you can barely see the little dashed line and my cursor here, and I've already gone up more than 1 pip. So with the numbers that we have here, what we're saying is if we follow this calculator's advice and put a sell order for these many units, if that chart even momentarily goes the other way, 1 pip, we will have lost our entire account. Okay? So we think, okay, well, wait a minute. We want to allow the chart to go up and down a bit because we still think it's going to head down, but it might momentarily go, the other way. So we want to allow more than 1 pip. All right, well, so let's play with that. So let's say we'll allow it to go 10 pips in the other direction. So notice I'm not saying we're going to put in a stop loss, but we're using the stop loss entry to kind of give us an idea of how many pips we should allow if it's going to go the wrong way for us. So we calculate, and now we went down only 1. So we went from 1 billion to 100 million. So you see that we want to allow quite a bit of pips. Let's say we did 100 pips. Now we're still up high, but 100 pips would be 1.125. So I'm going to have to drag this down, way down here somewhere. This would be 1.12. Look, I'm going to have to actually squeeze this thing in to show you where 100 pips would be. Right there. Actually, it's even more than that. Actually, you know what? I can get another calculator. I'm going to put it right here and go this way. So this would be our stop loss calculator. And I'm going to put it at 1.125. Way up here, way up here. See, I still haven't reached enough. There we go. We're getting closer. 1.125, somewhere in there, somewhere there. So what I'm saying now is the amount of profit we think we'd like to make is less than what we're going to allow ourselves to lose if we allow this thing to go 100 pips in the wrong direction. So obviously 100 pips is too much for us. So what's the problem? Well, the problem really is that we are risking 100% of our account, which we don't want to do. So actually what they tell you is you want to risk between 1 and 2%. So let's do 2%. Let's go back to 1 pip for now. Let's calculate. Okay, so amount at risk, $2,000, not $100,000. It's still quite a bit of lots that we can buy. So let's think All right, so now we're back to 10 pips the wrong way. So let's say that we decided, okay, we're good with 2% of our money, and we're good with 10 pips. So we've got these numbers here. Let's go back to our chart. So we're good with 10 pips. 10 pips would be 1035. So let's bring this down to 1035. 1035. Where are we? There. That is the loss we're going to allow ourselves. Now that's a bit more reasonable. Let me blow this up here. Scroll it here. Okay, this is a bit more reasonable. We would like to make more of a profit than we're willing to risk a loss. So this looks better. All right, so we go back to our calculator and we actually take a close look at what's going on here. We're going to use another calculator. It's a profit calculator. So let's start again. Our account currency is in US dollars. We are trading Euro USDs. We're going to sell. What is the opening price? The opening price is 1.1025. So we come over here and we go 1025. And the close price is 1.0987, let's call it. 1.0987. Okay. Now, we'll go back to the position calculator. It says we can buy or sell, we can put into play or at risk 20 standard lots. So we're going to go over here and we're going to say 20 standard lots. So, all right, now check this out. We're going to do a sell order. These are the opening, closing prices, and trade size in lots. If this thing does what we want to do, if we put a sell order here and we go down here, that's only 38 pips movement. We can stand to make $7,600. So we can risk $2,000 to make possibly $7,600. So your small amount of risk could make you quite a bit of money. So I think what I hope you got out of this exercise is there's two different calculators and you have to play with both. And you can also decide, practice this right here where we use these price distance to calculate for us, so we wouldn't have to do that. And you can use the two together. And so this one tells you, what do you have in the account, what percentage you're willing to risk, and then how many pips the wrong way are you willing to allow. And then it gives you, okay, this is the maximum that you can buy in lots, and this is what you're risking. And then you can decide, you plug in, the other numbers here, the starting and ending price and the lots suggested, and you decide, if that's too much and you don't have to make that much in one play, then don't do that. Do 10. So don't risk 20, risk 10, risk 1. You're still going to make $380. And let's say that you only want to make $380, then that means you don't have to allow, you don't have to risk 2,000 to make 300. You could say, you know what, I want to risk 1%. So there, right there is $1,000. There's our 10 lots. That would be this one. That's still $3,800. If you decide that you want less tolerance for loss going the wrong way, let's say you only want to allow it to go 5 pips the wrong way, it's still 20 standard lots. And so once you're happy with the number of units, then you just plug in the units here, click sell, and if you did a market order, it would do it. And if you did a limit order, then you actually put the price in that you want to do a limit order. We already covered limit orders, so I'm not going to do that again. And that concludes part 2.